Good morning traders, welcome to Failure to Displace, and in this video we're going to take a look at this morning's London session trading where we had a really nice Asia session continuation trade. So let's jump into the charts and look at this setup. We can see using our liquidity tracker, links to the indicators are all in the description of this video, that we have untapped liquidity below us from yesterday's New York AM session. So a very bearish session in New York. Since then, the PM session consolidated, and Asia, as we're coming into our London window, is now breaking lower. So we can see we've got fair value gaps, displacement to the downside, and we're currently breaking below the Asia low. This is showing me that we actually are in a trending market. So Asia is not consolidated tightly, it's breaking lower. And obviously we've been bearish for several days now anyway. So this gives us the heads up that we may be looking for a continuation trade from the Asia range. We'll drop onto our 5-minute chart. So on the 5-minute, as we approach our trading session, so for this, I'm now trying to start trading at 1 AM. So this is 6 AM UK time. I'm seeing that there's a lot of action happens around this time. So I'm trying to get to my computer now for 6 AM just to see if we're getting any sweeps of liquidity and then look for setups from this time onwards. So a little bit earlier than the previous videos I've mentioned. At 1 AM, we've broken below, we're displacing below the Asia low, and we are getting very close to this untapped New York low from yesterday. As I'm looking at this, seeing that we've taken a high and we are displacing lower, I'm going to pull my fib from the Asia high, which is our current daily high, and I'm going to follow that down to the current daily low. Let's skip forward in time, so we're breaking a little bit lower. A little bit lower again as London's opened. And now we're starting to pull back. So at this point, this is where when I was watching this, I was expecting this low to start getting run now. When we come so close and then pull back, this is essentially teasing us. People are viewing this level now as an area of support and starting to look for reversals. But for us, we should be looking at this as relative equal lows here, which is just a liquidity pool. So we should expect this to be run, especially if we're analyzing this, seeing that we've got strong displacement, bearish fair value gaps, much larger candles coming down than we have on the bullish side. So we want to monitor what happens when we get to OTE, which is our 618 Fibonacci level. We can see price pulls up. Now we are leaving bullish fair value gaps. We're not going to get sucked into going long here because obviously we're seeing this is a potential trap here. So strong displacement now into the optimal trade entry. At this point, I dropped to the 1 minute. So I wouldn't take this optimal trade entry just at face value on the 5-minute. I want some kind of confirmation that I'm getting on the right side of the market. Because as you can see, we have cleared through a lot of the bearish fair value gaps now, and we've left bullish fair value gaps. So I want some confirmation just to ensure that I am on the right side of the market. So we'll drop onto the 1 minute time frame. And on the 1 minute, we can now start looking for our confirmation entry, which is essentially going to be, for me, the 2022 model reversal pattern. So we're going to be looking for a break of structure with displacement. So we've put in a high. We've got obviously relative equal highs from Asia just in here. Let us just mark this out. So our eyes can be watching this buy side liquidity here, which is just under the 786. So another zone in the optimal trade entry. We've not broken any structure yet to the downside, so we're still pumping higher. So we've definitely not got any setups to take a short at the moment. Our current break of structure for a short would be this swing low here. So this is the last swing low. Candle to the left is higher, candle to the right is higher, before we put in the new high. So that's our last swing low. So that's going to be our break of structure. So we're going to want to see a candle close with displacement below this break of structure. So we're respecting this high now. We are coming lower. No displacement here though. So there's no entry at this point. You can see that the bullish candle is bigger than the bearish candles coming down. Tiny fair value gap here. So this is where you potentially could take an entry on this, but for me that isn't enough confirmation. So I'm looking for really big candles. I want to see something that's bigger than the bullish candles going up to confirm my displacement. So the big candles are really what's telling us the story. I'm also paying a close attention to the time here. So we're currently consolidating, and really I'm looking for entries to be happening around the start of new 15-minute candles. So this is a theory from Stacey Burke where we get injections of volume at the 15-minute candle opens. So we're pulling back, we've not taken that high, so we're still respecting it. So there. That's a displacement candle. So we can see after this, we've got these small candles, small, so a little bit of consolidation. We see that there's no mistaking it. So this is where patience really pays. It's just hanging fire and not getting drawn into price action without that confirmation. So we're looking for these big candles. That's a nice big candle. We can see that instantly. It's engulfing this whole pattern at the top. We've left a nice fair value gap. So you could take your short position from here. Now again, for myself, stop loss would be just above this swing high. I was actually hanging on, so I'm looking at this fair value gap now, specifically the 50% area to be respected. Let's come back, it's tapped the 50%, it is respecting it. Look at the time, so we're at 22:23. So my eyes are on this 30 now, half an hour candle. So when the new 15-minute opens here, this is where I would expect additional volume to come in and a move to initiate itself. So the start of the new 15s. So we're breaking away. We could have entered here, no problem. Myself, I was just hanging fire. Put in here another high, respecting the 50%. Wick above, respecting the 50%. So this is all confirmation that this 1 minute fair value gap is holding strong. We're just about to come into, so rejecting away, come into the new half hour, and then we get a pin hammer at the half hour. So that's a lovely rejection candle. So what my entry was actually at the break of this low, is what I took it at. It had several touches of the 50%. The open of the new half hour candle was a rejection candle. So that was my confirmation, and I was going to enter as we broke that low. So this is little micro M formation. We break that swing low, targeting our first sell side liquidity, which is equal lows here. So we've got relative equal lows on the 1 minute time frame. Obviously we've got relative equal lows here, which is our current daily low, but the ultimate target, as we mentioned, we were being teased with the low of the New York session. So I'm expecting this to be run. So we've come up to optimal trade entry, we've been consolidating, we're not breaking any higher, we've opened up on a new half hour candle here. That's the confirmation I need to say, right, I will take that optimal trade entry for a short trade. Price breaks through. Displacement or a fair value gap, lean left, respecting the bottom of the 1 minute fair value gap, and then price drives away really nicely. So we can see we are on the right side of the market now. I would be confident in this trade. We're leaving bearish fair value gaps. So we hit the first sell side, that would be take profit 1 for me. Stop loss is staying where it is. I'm making a habit in my trading plan of not adjusting the stop loss, because there's oftentimes it will come back to break even and then continue in the direction that you want. So at this point, take 50% off, leave the stop loss where it is, and then hope for the rest to run down. Ultimate target for a nice 3R trade will be taking the New York session low from yesterday. And there we go. Aggressive move through the low. Trade closed 3R. That is just a perfect example of a continuation trade and how you can monitor the optimal trade entry on trending days to get in line with price action, especially when we've got key liquidity below us that we could see was likely to be run. I hope you found that useful. If you did, please leave the video a thumbs up. If you've got any questions, please leave them in the comments section down below and I will do my best to help you out where I can. And if you want to see more market reviews like this one, market analysis and strategy videos, then consider subscribing to the channel. I am dropping content more or less daily. Thanks for watching and I'll see you again in the next video.